There is nothing so useless as doing efficiently that which should not be done at all. My friends, we ask you to every day do something that is efficient. That is, spend 10 to 15 minutes with us. That quote was from Peter Drucker. And we want you to do the things that need to be done. How long will it take for you to master charting? Well, 10 to 15 minutes a day is what we ask, and you do it for as long as it takes. It's not 3 hours on a Sunday. It's not an hour a day, 5 days a week. It's 10 to 15 minutes. Yes, we do have special trainings we put out every day. You can spend a little more time on those, but please don't burn yourself out. Do practice trading, follow the charts with us, take the trainings as they come out. Don't get too rushed. We've got plenty of time to work our way through all of this. Practice trade as often as possible. If you want to supercharge your training, of course, our book is available. We're happy to get you a copy of that. I sent out some today. Follow the link in the show notes. And of course, if you want to supercharge your training, jump in as a Patreon supporter. I think we have 1 or 2 slots left. And thanks so much to those Patreon folks that help us underwrite the cost of putting this out to you free every single day. And don't forget, Patreon members, on Thursday at the close of the market, we will be producing for you those 20 weekly vertical crossovers to give you something each and every week to look at practice trading, in addition to the charts that we track every day. Let's jump into these charts. Look at the S&P. We see a green spinning top, solid green, which means a slowdown in the down movement. When we see red spinning tops that are open box, that's a slowdown in the up movement. So the solid green, you can see we've not reached the low that we did over the prior week. Things have slowed down a little bit. Price is right there on that weekly trend line, actually just a little bit above it. But that price percent oscillator, the all-important price percent oscillator, is still heading down along with the derivative oscillator. Let's look at the 2-day. What do we see there? Again, it was down for the day point. It's hard for me to see in this light. 3.5%. And of course, the prior 2-day candle that we had, that was Friday and Monday, this is the Tuesday chart, okay? What we see here is a red down candle, little wick on the top, wick on the bottom, solid red. Price percent oscillator still going down. Derivative oscillator is losing downward momentum. That's because of these 2 prior green candles that we saw. That devolution continues for a little while. It is an oscillator. We look at the half day and we can see where things moved right up. Isn't it beautiful when you see the trend line act like a ceiling and you see things hit it and then just roll right off of it? Hasn't crossed over going down yet, but looks like it's getting close. So we'll continue to keep our eye on things as this week continues to develop. Pay close attention to that weekly and 2-day. They're still strong going down, so that looks decent. Let's move from the S&P 500 down 0.25% to the Qs down 0.35%. And of course, we have another solid green candle. This doesn't have a wick on the top. It does have a little wick on the bottom. Again, like the S&P, not reaching a lower low. Price percent oscillator headed down on the weekly. Derivative oscillator headed down. Look at the 2-day. Bouncing off at this point, just the first day of this latest 2-day candle, but bouncing off the 2-day trend line, not the weekly here, like we saw on the half-day chart on the S&P. We see the price percent oscillator still going down, derivative oscillator devolving because of those prior up movements for those 4 days. We look at the half day and boom, look at it just roll over and head down. That's nice to see. That is where we are on our 2 stock indexes. I guess we can now move away from stocks and we go to bonds, which boom, up for the day. The big gainer for the day, 1.71%. Haven't reached the low of the prior week, or did we? Well, sometimes. This is why if you look on the left-hand side of the chart, you can see the low 141.45, 141.52. So we did get a touch lower. My eyes deceived me. That's why it's nice to have those charts pop up. Another great thing about TC2000, the paid version of freestockcharts.com. There's $25 off coupon, discount code in your show notes every day. If you're not a subscriber, go to chartingwealth.com, sign up for free. That list is never shared, never spammed. We see the price percent oscillator heading down. It's lost some of that downward momentum. Derivative oscillator still heading down. That's on the weekly chart. Now we go closer and we can see where the derivative oscillator's losing momentum. Price percent oscillator is about flat. Green open box spinning top still below the 2-day, so it's not past that, well below the weekly as far as trend lines go, but pay attention if you're in that down trade and you haven't already cashed out of it when we hit the most recent low. Just keep your eye particularly on that 2-day penetration. That 2-day trend line's a warning signal. Let's see, as far as warning signals on the weekly chart, we're just barely moving a little bit lower as the week has 2 days into it. If you see weakening more on this candle, do pay close attention to that. You like to see accelerating candles moving down, getting bigger as things crash more, but that is not happening. That's on the weekly and the 2-day. What's up with the intraday? You saw where things crossed over going up in the morning and then moved even higher in the afternoon, penetrating that 2-day trend line on the half-day 195-minute chart. So if you're shorting TLT, pay attention, see how things move tomorrow. Now, let's leave bonds. We'll go to gold before we get to Bitcoin. Gold up for the day. That's good to see, 0.45%. We look at the weekly on gold, and have we reached the low? I hope so. We had some indecision last week. We have a doji this week, which is lots of indecision. Price percent oscillator still a little bit negative. It's still negative and still going down a little bit. Derivative oscillators about flat. That's on the weekly. What's up with the 2-day? Trying to cross over, hasn't done it yet. If we have an up day on Wednesday, maybe you'll have a 2-day crossover going up. That would be beautiful. I want gold to take off. We'll pay attention, see where that goes. Derivative oscillator trying to go green. We go to the half day, and of course you can see where gold has popped and then down a little bit, sliding sideways, down, popping, down, and again, gold is positive on the price percent oscillator. Derivative oscillators flip back over to positive. But again, we want to really see, I want to really see gold take off. I want gold to just fly up. But I'll wait till the charts tell me that's happening. That's where we are on our 4 big charts. Lastly, we'll go back to the weekly. Take a look at Bitcoin down for the day, 1.31%. As we look at things on Bitcoin, we can see this week starting off quite nicely. Nice big green up candle. Price percent oscillator moving up. Derivative oscillator gaining upward momentum. 2-day chart just continuing to climb. That is beautiful. And that is the first day of this latest 2-day candle, losing a little bit of that momentum. It was heading up at a higher angle, but still okay. And we see the derivative oscillator gaining upward momentum. We look at where things peaked, and that was on Monday, and sort of devolving a little bit on Wednesday, but staying above that half-day trend line, well above the 2-day and the weekly. So watch again, particularly that 2-day and weekly. We can see the derivative oscillator on this half day is still losing momentum. Price percent oscillator is positive, but heading down a little bit. So pay close attention. That's where we are, folks. God bless. Thanks so much for being with us. All the best from the whole team at Charting Wealth World Headquarters.